Hello, my name is Brandon Wagner. I'm a CPA with Johnson Block and Company, one of the town's auditors. I'm here to briefly talk about the town's 2017 audit and their financial statements. We're currently in the process of issuing the audit, but we will issue an unmodified opinion on the financial statements, which pretty much means there's been no material modifications. We feel the town's financial statements are in conformity with generally accepted accounting principles, and they are free of any material misstatements. It is the highest level of assurance we can give, and really, it's what the town should be aiming for every year. I'm not going to go over the actual audit report itself. I'm going to go over a brief summary, which I sent to Sue, so hopefully you guys all have a copy. It's just going to touch on some highlights of the audit and some of the financial activity throughout the year. On the first page, you'll see a summarized balance sheet. This will show the town's general fund assets, its liabilities, its deferred inflows of resources, and then finally its fund balance. At the top, you'll see the town's assets. This consists of mainly cash, which is about $316,000, and then about $375,000 that's just considered due from other funds, and that's actually the 2017 tax levy that will be collected in 2018. And then the last category there is just the other assets. That's mainly receivables at the end of the year, which is from the November and December landfill fees, as well as the fourth quarter cable fee, and then just a little bit of prepaid insurance. And then next you'll see the liabilities. This is about $14,000 and really only consists of vendor payables at year end. Next you'll see the deferred inflows of resources. These are actually revenues that the town has collected but will not recognize until 2018. And once again, that's a big part of that is the 2017 tax levy, about $375,000. And the remaining $4,400 is deferred license fees that were collected in 17 but will not be recognized until 2018. Lastly, you have the fund balance, which at the end of the year, the town ended with a fund balance of almost $364,000. Below, there's a slight little breakdown of the fund balance, and the town actually has fund balance in three categories, which is non-spendable, and that's fund balance which cannot be used to meet current obligations. Right now, it's in the form of prepaid assets. The next is committed fund balance, and these are amounts that the board has set aside for things like vehicle purchases, equipment purchases, road improvements. At the end of the year, there was $186,000 almost set aside as committed fund balance. And the last category is unassigned fund balance, which is the fund balance that is available for spending for day-to-day operations. And at the end of the year, there was about $162,000 in unassigned fund balance. On the next page, page 2, we have a summarized income statement that also includes the town's final budget to how they actually performed through the year. And as you'll see, the town budgeted for roughly $932,000 in revenues. Revenues for 2017 actually came out to be about $961,000. That's largely due to landfill charges coming in a lot higher than it budgeted, which is kind of tough for the town to budget for. It can fluctuate a lot year to year. And then you'll see the expenditures were budgeted for about $1,038,000 and came in about $25,000 less at about $1,011,000, and that's due in large part to the 2017 road work coming in a decent amount less than budgeted. And then the last category is the other financing sources, which was what the town had budgeted for their debt proceeds, which came in right on budget. You'll see that the town had budgeted for a close to $56,000 increase in fund balance, but actually had a close to $110,000 increase in fund balance, which is really good. Next, you'll see we have a comparison between 2017 and 2016 in the general obligation debt. It shows the amount of debt that was outstanding at both 2016 year end and 2017 year end. You will see that the GO debt has increased slightly, mainly due to the debt that was taken out this year. And then below that, you'll see the town's debt capacity, which is actually a function of the town's equalized value. The town can legally borrow or have debt outstanding of up to 5% of its equalized value. And even while the town's GO debt did increase over the course of the year, the equalized value went up, so therefore their debt capacity went up. So the town in both 16 and 17 is utilizing less than 2% of its debt capacity. Page 3 is just a more visual look at expenditures over the course of the last 5 years. You'll notice that the largest expenditures in 2017 and for most years are the public works expenditures and also the capital outlay expenditures. The public works sometimes will have larger jumps, such as 2015, I think there was some larger road work done then, and then the capital outlay, that fluctuates a decent amount depending on when the town makes certain equipment purchases, and it was up a decent amount from 2016, large part due to the town buying a new grader that was about $161,000. The next page is just a pie graph of how the expenditures looked from 2017 and also 2016. You will see that in 2017 expenditures were $1,011,000, up a decent amount from 2016 when they were $911,000. But if you look at each category as a percentage of the whole, they stayed fairly consistent year to year. Next is just another 5-year visual chart of revenues for the town over the course of the last 5 years. As you can see, tax revenue is the biggest source of revenue for the town and is fairly consistent. Next you'll have your intergovernmental revenue, which consists of state shared aid, highway aid, and on occasion, depending on the year, it'll sometimes include some emergency aid from the state or county. And then you'll have the regulation and compliance, which makes up a big chunk of the revenue as well. And this is mainly the tipping fees from the landfill, and like I had mentioned before, this varies a lot and just really depends on how much is tipped at the landfill. On the next page, we have another pie chart for a visual representation of the revenues for 2017 and 2016. As you can see, revenues for 2017 were not even $300 different than 2016, so they've been very consistent. And looking at the pie chart, the percentages of each category had stayed very consistent over the course of the 2 years. On the next page, we have another 5-year breakout of the geo debt versus the town's debt capacity. And as you'll notice down below, as I mentioned before, debt capacity is a function of equalized value, so you'll see that the debt limit has been steadily increasing, as has the equalized value of the town. But as a percentage, the town has stayed very consistent with utilizing about 3 to 2% of its debt capacity. And on the last page, we have a breakdown of the fund balance categories for the last 5 years. And as I mentioned before, the town has fund balances in the non-spendable, the committed, and the unassigned fund balance categories. Like I mentioned before, the non-spendable, it was in prepaids this year and has stayed fairly consistent over the course of the last 5 years. The committed fund balance at the end of the year was about $186,000, and that can vary year to year depending on when the town makes expenditures that it had committed for or when it commits new funds for future expenditures. And then you'll notice that the unassigned fund balance has grown quite a bit, and especially from 16 to 17, and that's just because they had a very, very good year and a large increase in fund balance. So if you have any questions, please feel free to let Sue know, and I will do my best to get back to her quickly and respond to any of your questions. Thank you.